Good afternoon, Cara. Yeah, look, I love my numbers. I love crunching numbers, and that's kind of the heart of the technical analysis that I do. It's not just indicators and lines on charts. So I'd like to actually go and do the research. And if I have a hunch, a suspicion about a particular pattern, I then like to go and grab the data and do some analysis on that. And I thought, well, given it's earnings season at the moment, plenty going on, let's have a look at what happens after we see some of these big swings in the market. So depending on whether it's good news or bad news, a big pop, it could be 5, 10, 15, 20%. And then where the market is placed, a week, a month, 3 months, 6 months after that. So I guess for viewers, based upon the analysis, they can say, well, XYZ has just popped 10%, and Carl suggests that, his data says, it's probably going to be higher in 6 months' time, and they can make their decisions based upon that.
All right, well, let's have a look at some of that data then that you have provided for us. Let's start with some of those moves towards the lower end, so 5 to 20% in terms of gains or losses. Walk us through what you're seeing in terms of the long-term performance.
Yeah, I mean, look, this data was very surprising for me, and I guess it highlights how you might have an idea of how something works, and until you do the analysis, you don't know. So I just assumed that stocks that pop up, as I'm a trend follower, stocks that go up, you want to buy those moves, and stocks that go down, you want to sell those moves. I don't believe in sort of buying after a big fall in price, of catching the falling knife. So really, what we're looking at here actually surprised me. So we're seeing that for a 5 to 10% gain, which I've called a fairly typical sort of post-earnings result. Large sample size here, so over 15,000 data points for the gains and 12,000 for the losses. After about a week after that gain, you probably have a small loss after the gains, but a small win after the losses. And I had expected that you'd be losing money after the one-day losses. It's not the case. It seems you're kind of making money across all those time frames. But I think the message here is that you tend to be making more if you're buying into a gain, a big gain, rather than buying into a loss. I think that's the message there. As the moves get a little bit bigger, so we moved down to the bottom of the table, it does change around a little bit, and I get, again, very, very surprised by this. So we're finding that the bigger drops, 10 to 20% drops, you're better off buying those than you are buying the big jumps. So that one was surprising.